The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. This is Brian Caprice from Keep Trading Simple. I'm going to welcome everybody to our market update, analyzing potential opportunities. Week has kind of started off kind of crazy, right? We've had some crazy movement, new highs. It's just been all kinds of stuff this week. So it's only Tuesday. We're already seeing crazy market, crazy news, crazy movement in the currencies. Again, very, very excited to be here. So welcome back for those of you that are new to the channel. I also do have one update to give you guys, and I'll give that to you in a couple slides on the Virtual Education Summit. Pretty exciting information there as well. But let's just jump into it. Like I said, we have a lot to cover today, and for a week that doesn't have a lot of kind of pre-planned kind of news, we've heard a lot in the news already. All right, so first things first, for those of you that are new, my name is Brian. I'm the president and CEO of Keep Trading Simple. I've been trading for basically since the tech bubble. I can date myself there. I started trading back in 99, 2000 timeframe. Perfect opportunity to get into the markets when we had a first major crash. Started the way many people did, retail trader, buying books. We didn't really have YouTube back then, going to seminars, trying to get golden nuggets everywhere I could. Did everything wrong in the book, but didn't know it at the time. I know it now looking back. Seen many different things. Started with stocks. Traditional options is kind of really where my forte was originally. Found currencies, learned how to trade futures, became a financial advisor, kind of learned what things were on the inside. Like when I did that, I didn't realize the importance of understanding what bonds were, the role that bonds play in the overall market. And then at that point, realized that my passion was in teaching other people how to do it. Left the industry, got out of financial advising, started trading, started traveling, spent 6 years traveling around the country, both in the US and Canada. That's where I met my wife. Written a number of different courses that are Nadex specific based courses, relying on my background with traditional options, and then also combining that with some currency trading that obviously is what my main forte is, and kind of went from there. So my strategy is a little bit different, and the things that I focus on today, you may look at them and say, hey, wait a second, where are all your indicators? Well, I'm not a big indicators guy. I understand how to use indicators, where they go, when to use them, where the problems with indicators are. But I try to keep things as simple as possible, and that's where I came up with the name of the company, Keep Trading Simple. I try to remove a lot of the distractions. So you will see my charts. I'll have some lines. I'll have some horizontal boxes, and I'm what's called a price action trader. So I've gotten a number of emails over the last few weeks like, well, where do I find more about price action, and where do I, price action is a science. So for those of you that are new to the broadcast or have been watching me for a few weeks, these are all very hard questions to answer because there's not just one book. This has been kind of going over years and years and years of studying candles and formations and seeing how they respond and react to different prices. So when you look at my analysis, just be aware of that. Again, I am considered a price action trader, more of a short-term trader, not necessarily swing or long-term, although I do also do obviously wealth side things as well. All right. So with that said, let's jump into the agenda for today. Actually, I forgot the disclaimer. Let me cover that real quick. Thank God for the slides, right? Nadex risk disclaimer, trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile and investors risk losing the cost to enter their transaction, including fees. The information presented here within this presentation is for information and education purposes only and should not be considered an offer to a solicitation to buy or sell any financial instrument or on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Nadex is a registered trademark of the IG group, for those of you that are unfamiliar with it. Now, here's the agenda for today, all right? First things first, I'm going to cover what the upcoming news is for the week. It's actually kind of a, for lack of a better word, an anemic week. There's not a whole lot of pre-planned news, although tomorrow is an extremely pivotal day for the week. A lot of news, extremely important, and I'll break that down in a second for you. Then what I'll dive into the indices and look for opportunities. Obviously, NQ yesterday, the Nasdaq, we were at all-time highs. The S&P put a nice rally in, as well as the Dow. Those are things that I mentioned last week that we could see that movement with really the workforce reopening and the potential of good unemployment numbers, which we got last week, and I'll cover that. Then I'll dive into Forex. A lot of stuff going on. The dollar just got hammered last week. And it's kind of interesting to see where we are moving now, okay? With the dollar being, dollar's shown a little bit of strength back today, but a weak dollar does some interesting things in the globe, especially with some of the tensions and things like that we are seeing. And then last but not least, I'm going to dive into commodities. We'll cover basically, gold, oil, and then I'll also touch on silver as another one of the Nadex commodities that we could trade. Okay. Now, I said I would mention the virtual summit. So let me bring another window in real quick. I don't know if you guys are on YouTube very frequently, but YouTube is a great place to get additional resources. I'm not sure if you guys have ever looked or following or subscribing to Nadex. If you guys search Nadex, you will be able to find this Nadex profile, right? Again, this is YouTube. You guys are familiar with it. First thing you do when you go to Nadex is make sure you hit the subscribe button to get updates for when Nadex is posting new information. Here is that virtual education summit. People have been asking, when are the videos going up? I missed it, or I'd like to rewatch something all over again. Where can I find it? Go to the YouTube page, subscribe, go down here and click the virtual education summit, basics and advanced. And when you click it, all of the recordings are up here. Now it's missing one recording. That one should be up. That was the last one to kind of go through. That was Dan's breakdown. But you'll see all the different pieces are up here. You can start, stop, take notes, take pictures, do whatever you guys want. Make sure you guys give these things a like when you're on them. It helps Nadex create additional content for you guys. But I just wanted to make sure that you guys were able to go out there and see it, okay? Now, again, all these videos have individual views. This has actually been viewed a bunch more than this. This is just the first video of all of them. All right, so again, go to YouTube, go to Nadex, and then the first thing you do is click on this first section right here, and you will see this virtual education summit. It's inside of its own playlist, and you can see my presentation here, the introduction to technical analysis, as well as the advanced presentation on using ATR. All right, so that's where that's at. All right, so let's dive into the upcoming news event. So let's bring a new window in as well. Now, again, this is Forex Factory. You guys that I know that have been with me, you know that I use this predominantly because I have the scanner right up top and I'm able to kind of manipulate this as far as currency goes. But let's break down things for the week. Now, I've said the week doesn't have a whole lot of kind of pre-planned news, right? By that, I mean, typically we have a whole lot more news. I mean, here's Tuesday, here's Friday. You can see today, there's really nothing. We have some very, very minor market moving based news, and I'll tell you what that means in a sec. Tomorrow is basically the day for news, okay? We start off in the morning with CPI. Again, CPI, if you guys are unfamiliar with it, you can always click on it and kind of see here, it's consumer prices, and it deals with inflation. Now, why is inflation important? Well, with the U.S. kind of printing money for stimulus right now, gold is kind of a big focus for inflation. So you may not know what CPI is. You may not know how to trade it. You may not know anything about gold, but inflation has a direct effect on the overall stock indices, on all the currencies, as well as all the commodities. Now, you heard me mention before about the dollar being extremely weak. There's one thing, and again, you've heard Larry Kudlow and a lot of the other talking heads talk about King Dollar and a lot of these kind of things that they've branded for the dollar. And we want a strong dollar, right? Globally, we're a leader. There are advantages to having weak currencies, okay? Goods are easier and cheaper to purchase from for other countries to purchase from us when we have a weak dollar. So if we're looking to stimulate the economy, having a weak currency is actually a benefit. It will increase your exports, okay? With other nations having problems, if the United States has cheap goods, that is good, right? Well, one of the determining factors about what the kind of value of your currency is based off inflation. That's where we start tomorrow. Now, this is kind of the big thing that I've been watching for all week. Okay, at 2 p.m. tomorrow, we have the FOMC economic projections. Normally, we have this, the statement, the Fed funds, and then the press conference. Those are pretty standard. I don't expect there to be any type of a rate cut yet, but the FOMC economic projections could be a big thing. We don't see this too often, okay? What is the FOMC's opinion of where we are, and basically, how is the economy reacting, and what's going to be the future as far as they see it of the kind of recovery from COVID-19. I mean, markets at all-time highs, but what does the economy look like? A lot of moving pieces here are happening. Getting this FOMC economic projections should be pretty interesting. I actually don't expect there to be as much market movement tomorrow from the open until 2. I mean, especially from 12 to 2. Until we get this economic projections. Now, why is this important? Well, there's no forecast. Nobody has an idea or a prediction. It's not a number. We can't say, oh, we don't expect it to be a Fed run. There are obviously predictions on raising and lowering interest rates. There is no prediction on their opinion of what's going to happen in the future. Now, their opinion matters because they change interest rates, they do inflation, they deal with stimulus. I mean, they deal with all kinds of things. So extremely important news release tomorrow. You're going to want to make sure that any positions that you were in, you are protected, okay? Because this has the potential, I'm not saying it will, but it has the potential to move the market in crazy ways in a very short period of time, okay? There is nothing worse than being a trader, having a position that is super close to profit target, and all of a sudden, it cranks back against you, it takes out your stop loss, and you lost money on a trade. and you're like, what the heck just happened? And it's something as big as FOMC notes, okay? Going into Thursday, there's no reds. Basically, the best thing that we had that morning is the PPI and the unemployment claims. Although these unemployment claims, look at this, the forecast right now is 1.5, so it is shrinking, right? Remember, we used to be much, much higher than that. We were talking about over here where we had 3, almost 3, 2.5, and now we're down to 1.5. So the unemployment claims number is getting smaller. And again, remember, this is first-time claims, not continuing. Friday, we have some early pound data, which should be interesting. This is quite a large jump for GDP, going from -5 to -18, as well as words of, Brexit. This could be a big mover for the pound if you're a currencies trader as well. And then Friday morning, we have preliminary University of Michigan consumer sentiment. Also important, it's actually supposed to go up, meaning that the consumer is a little bit happier. Now, for those of you that missed last week, and again, we mentioned this last week, of how big those numbers could be, and I mentioned last week, we could actually have a miss, right? I didn't actually expect it to be this much positive, but I didn't expect this to hit the forecast of -7, okay? I expected this to be a bit lower, like a -3 or something. I didn't expect there to be that much of a change. Big difference. As well as I mentioned last week, remember I said, hey, listen, what happens if this comes in at 17% or 16% or maybe even 22? What happens, right? I was kind of leaning towards the 15 mark. That's where I figured we'd be slightly above where we were previously. I didn't think we were going to hit 19. We came in at 13.3. Okay, that's a drop in the unemployment rate. Okay, so again, I expect that the next time we get a non-farm, in obviously, almost a month from now, a little bit less than a month, 3 weeks, obviously with people going back to work, states opening, that is going to go down again. So the question is, will we accelerate at the same rate we fell? Okay, we're already starting to see signs of that. We're seeing the markets in great places. Remember, when we started getting these huge numbers, that's where the market absolutely just collapsed, right? That March 6th number. Well, we're back up to that same area. We're still at 13% unemployment. Where the heck can this market move to when this gets back down into that 5 range or that 6 range, when it gets cut in half? Yeah. Well, where do we see where do we start to see that? That's coming in right here with this FOMC, economic projections. Okay. So again, that's why this Wednesday is such an important figure. Now, looking kind of where we are right now, at least in the currency market, because that's the second section, you guys can see there's okay movement in the last 24 hours. The yen was just absolutely on a mission. Last night, for my, my breakdown for my students, this was down like 160. This was down like 180. So it's starting to level out a little bit. Everything's kind of equalizing a little bit. But what we are seeing across the board is dollar weakness. About the only dollar strength we see is versus the CAD. But again, weakness here, weakness here, weakness here, weakness here, obviously. A little bit of strength, and again, that's the commodity currencies are a little bit weaker. Again, little tiny bit of strength here, and again, these two are more or less flat. So for the most part, I would say the dollar is kind of kicking a little bit today, but again, now we're seeing weakness again. Okay, weakness, 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 which is actually not horrible for our economy. All right, so let's jump into the charts and kind of see what we have right now. All right, let me shrink. Let's bring this back up. All right, so first things first, let's dive into the indices. So on a larger kind of daily basis, right? The dollar, where are we at with the NQ? Way up here. Here was that previous high again, that March 6th time frame when we saw the market. Just actually, this is actually February 19th where we saw the collapse. Many of the other ones, it's March 6th. But this is where the collapse started in the NQ, okay? Since that time, again, this thing bottomed down here around March 23rd. We've seen just a rally. So we're back at all-time highs. Now, one of the things about all-time highs, and again, there was a small position that I had kind of labeled in here. I was looking for this kind of pullback, and it kind of collapsed back down again. This is from my guys last night. It's very hard to figure out where sellers are going to step into the market in a situation like this. Now, whenever we see large pops up, you got to be thinking about retracements, about where they're going to turn and flip. There's always a problem about picking tops and bottoms. Now, bottoms are a little bit easier because you do have price history. All-time highs are a little bit more difficult to figure out. Now, you don't want to be that person that buys it at the very, very top. Okay, so what you're doing is you're looking for kind of pullback opportunities. And the way to do that would be looking for smaller time frame, kind of what I would call failure to go higher. As I've mentioned this, terminology before. Okay, so we have where prices pushed up, and again, very, very strong price, break up basically from the open today, and now we're seeing a bit of a pullback. So if it is unable to push any higher, when it closes below that level, that could be a signal for us to potentially get short. Okay, now one of the things about all-time highs is any type of prediction of the exact moment where price is going to turn, or even targeting to the top side, you're really just guessing. Okay, there is no history to show us that sellers have stepped in. It's literally like trying to pick a crystal ball. So a lot of times what I'll do myself is I'll look for kind of lower time frame situations where, listen, we know, there's buyers pulling back, right? We knew that price kind of took off from here. Where are we when kind of blockbuster news releases? Okay, we don't know when X media outlet is going to release a story or an op-ed, piece, right? Those are not predictable, right? Those could happen at any time. But what I do know is times at like 10 o'clock in the morning when there are reversals are great times. Times when there is economic news releases like tomorrow at 8:30 in the morning, those are great times to see where we are at, okay? On a larger time frame, right, I can't tell you what's above. I can't see anything because we've never been there, right? On the hourly and the lower time frames, what I can see is areas where we've seen price move off of. So ways to look at this, if you were looking to get long, we know we are kind of in a pullback right now. And again, right now being 12, it's going to be a little bit lower. It may pull back and kind of lessen itself from today, right? Tomorrow's economic projections, they may say, hey, listen, we are going to be in an extended recession for a long period of time. All of a sudden, this thing will probably head to the downside, right? But there are areas that we're looking for. Little bounces here, a basing level, and then pops. Another little area right here where we saw a basic pullback, and again, on lower time frames, you're going to see this pullback, right? Impulse, correction, impulse, right? So those are the kind of areas that we're looking for. Again, you guys can see I had this white area marked off. This was an area where we had basing, it popped. That's kind of what I'm focusing on right now. Right now, areas like this where we're at like 97, 67, if price is able to come back down to there, that's kind of an area I like, right? We've seen price respect that area. It based, it popped, it came back up, it touched it, it launched again. Another small little area that's kind of hidden in here would be in this range, right? So that would be another one that I'm looking for. And what I'm trying to do is I'm trying to coincide this with, okay, where are the reversal times? I know 10, 10:30 in the morning is great. I know that there's news tomorrow at 8:30. I know that there's FOMC notes tomorrow. So a lot of different ways that you can play this one. Now, this is obviously one of the knockout-based pairs or knockout-based assets. So again, you can get in there and trade this one with knockouts. Be cautious about it. And again, there's many people that have broken down how to trade knockouts. One of the things that I'm keeping in my mind when I'm looking at these, when we do get pullbacks, typically when you have a pullback, it may not necessarily be the nicest for a knockout. It tends to kind of match up, in my opinion, with binaries a little bit more. Because again, when it breaks out, it's breaking those knockouts, and then when it pulls back, it's kind of printing, and you're kind of in a weird place in those knockouts. Be cautious tomorrow using knockouts because, again, nobody knows what those projections are going to be. Is there potentially going to be some volatility? Could there be candles that are bouncing back and forth with not a lot of movement? A lot of wicks? Yeah, absolutely. Okay. And again, those kind of whipsawing back and forth tends to be a better environment for a binary, not necessarily knockout. So for me, for these all-time highs up here, this is the only one like this. Again, it's kind of hard. We're looking for kind of a feather to go higher. Again, there may be something later on today. This is putting in kind of a nice little bid here, but we need to see it pull back a little bit more before we'd be willing to just take that. But one thing I will say about this one is the ascent that we've had today, basically 2-3 candles straight up, basing, and now it's collapsing. I am looking for somewhat of a retrace in this position, but I want to see kind of, I want to see a confirmation that it's going to come back down again. I want to see it break below, get a little space, and then attempt to come up and not break new highs, and that's where I'm going to be looking to get short. Okay, so that's what I'm looking for in the NQ. S&P. So S&P, here was a trade setup again that we had last night. This is the exact example. Okay, so what I was talking about here was I wanted to come down, get a little bit of a space, right, and then I want to see it come up and test. That's exactly what we had right here in this piece, right? Here's where we are now. This actually occurred at about 2 o'clock this morning. It's an area that I marked off for my students last night. Again, the exact example of how to play the top of something, right? You have a new push forward. It kind of pulls back, comes up and retests and does not actually go higher. That's where you end up getting in. And you guys, you can see this came all the way back down to another level of basing. Here, I'll bring on the hourly. You guys can see the level of basing down here a bit more, right? So I'm going to leave that there for my students to review tonight. But that area is another potential area where we could have reversals, okay? Again, same kind of situation as tomorrow. It's still another high. I would probably use the orange box at this point. This is the supply and demand indicator that I have. Things that I'm looking for here, again, price is obviously not making new highs. It's running into a little bit of a problem here. It's not coming any higher. But what do I see? I see a gigantic space right here, right? This gigantic space. Look at this. Price launched itself up, not many pullbacks. And then what has happened when it's come back to that area? Bounced, and it has been unable to get back. So if price is able to break below this level down here, again, my data is going to be slightly off because it's an ECN based data, this one. is not coming from the futures market directly, but it's 31.86. So probably about 31.80 in that range is where this zone starts. I got to be looking at this and saying, hey, listen, there's nothing in here really slowing this down. This is a racetrack to the downside. I could be, there are potential shorts in here coming back down to this 31.30-ish range, right? That's the last time where buyers have really stepped in. We've had an explosive move to the top side. Kind of what's on my radar, right? If we start to grind up a little bit, again, I could be looking for a potential small short here. Again, many ways to play this one. Again, a break below this, 31.80-ish range could be a potential short going into this 31.30 range. All right, so that's the S&P for me. Going into the Dow. So the Dow, I had a zone marked off. I was looking for a little bit more. So the Dow is the weakest kind of the three, meaning that it has not gotten all the way back up. The S&P is kind of sitting up in here. There's a little kind of hidden zone. It's on a 4-hour. Many of you may have heard me say this before. It's a wick over wick on the higher time frames, but look at the basing level here, right? It came across and then launched itself down in two very clean candles, almost no wicks. Those typically tend to be pretty good signs in price action that something's going on, right? Particularly when there's no wick top or bottom and it did it over two candles. So it's a small little kind of hidden area that I was looking for price to get up to, looking to get short. Unfortunately, didn't make it there yet. Now, it is still continuing to put new highs in, right? It is pulling back. It's in an area of basing right now. I'm still kind of holding for this to come back up into kind of this 28.025 range. I would like for this to be up there. I'm kind of like pro Dow right now. I want the Dow to get up there before the 830 release tomorrow. I don't know if I'll get my wishes or not, but I would like to be able to go into that data, that price level with the CPI and the core PPI number. To me, that would give me enough insight to be able to say, hey, listen, I'm interested in taking a binary, maybe something a little bit out of the money or a little bit farther out of the money, so it's cheaper to get into, meaning if I lose it, it's not really a big loss, but it doesn't require massive amounts of movement. Now, the plan is, if I can get into those tomorrow morning by that 830 release, get short there, I want to make sure that I'm out of this position by the 2 o'clock time frame. Why? Because if I am in a profitable position, I don't necessarily want to be messing with that FOMC notes because that could definitely cause this thing to spike up or spike down. Now, if I get in that position with an out of the money binary and I am not profitable, again, the most you can lose is what the cost is to enter the transaction, including fees. So what happens if it is negative? It's above that area or just a little bit in, and it is still losing money. Is there any point in closing off before FOMC? No, you're already at your maximum loss. There's no risk. You can't lose any more than what you put in the position. Again, at that point, it's kind of like, hey, listen, do the trading gods favor us? Does the FOMC economic projections help us? It could, but you're already technically at your maximum loss, so there's nothing more you can lose. Let it go. It may bounce into our favor. Take it out with a working order, maybe based off volatility. You end up doing a 2 or 3 to 1 out of it. All right, so that's kind of my plan for the Dow tomorrow, particularly with what we have going into this one. All right, so diving into the currencies. So the currency situation is pretty interesting. I'm going to start off with the Aussie. So the Aussie has been an absolute monster now for like the last 3-4 weeks. Last week it was crazy, and you guys mentioned we put in a position that if it broke below, we were looking for a retrace. Now we've gone all the way back up, very reminiscent of what the NQ was looking like, and this is a level that I've been talking about for a couple weeks now. That if we get up to this level, you got to be looking short. Well, look at the candle today, guys. Look over here, right? The candle is red. It is down, again, at its low, approximately 150 pips. The ATR on this, the average movement per day, is only 97. So it's done 1.5 times its movement. You think there may be some trade setups in this one? Absolutely. Okay, absolutely. All right. Now, we bounce off that level. On a 4-hour, you can see that it was a pretty fast movement, right? And that started yesterday, late last night. And it's pulled back again. So dropping the lower time frames, this is kind of where we were at before. Okay, this is where what takes us into what we did last week. So last week we had set up a position here saying, hey, listen, if we were able to break below this, we're looking to get short. Now that analysis is still there. And remember, I said, hey, listen, if we don't break, no harm, no foul. You didn't get in, no risk put on the table. But the analysis doesn't change. We're still looking for a break of that level. Now we've seen price turn, right, based off of that daily area of selling that we had identified. I mean, it's been there for months, right? It is now turned away, pushed back down again, okay? There was a small reentry, and unfortunately didn't get back into it. There was an opportunity here, but price is not quite there yet, and it's kind of forming a little bit of a level below it. The short's there. If you missed the short, oh well, no harm, no foul. We didn't get in. It's continuing to push to the downside. Where we go with this now, we're kind of sitting in the middle of the range. If we push a little bit higher, we're probably okay for some type of a short position. Again, we've been rallying over the last few hours. last night's session, again, did nothing but push this straight down. So I'm still kind of eyeing, oops, not that one. I am still eyeing kind of this level down here, right? Again, set alerts, be notified when price is getting close to that level. I'm looking for price to come back down. Would I be willing to take a long from this level? No. Would I take one off of here? No, not really. Would I take one from this lower level? Maybe. It would depend what time it actually hits that level, because remember, there's always smaller term opportunities as well. Would I take it off this green level? Maybe. If we get, and if for some reason, if price rallies down and we are sitting over here in this level down at 68.69 before the news release tomorrow morning, sure, I'd be willing to take a position that lasts 2-3 hours tomorrow morning, pairing the US dollar versus the Aussie. Why? The Aussie dollar is the proxy for gold. CPI is basically a reading on inflation. Inflation is gold. That's how it's basically regulated. So with Aussie dollar being a proxy for gold, there could be some great movement. So that's a level that we definitely need to keep track of. Again, we have this position below looking for a break, but at the same time, we also have a position that we could put on here. Okay. Now again, I don't know, if this is going to be a great profit, risk to reward yet. I can't see what price is going to look like, but when it comes down, there could be a potential setup, again, paired with news. And again, this could be a great binary trade. A little bit farther out of the money, take a little bit of risk on it, not too much. If it comes down and hits and bounces, you can take it off at 2 or 3 to 1 to your risk. Don't even need to hold until expiration, because remember, expiration would be at 3 after the actual FOMC notes, which is, again, you're kind of playing with fire there, right? We want to kind of limit risk as much as possible, okay? Looking at the Aussie yen. So Aussie yen is another one of those positions. We had kind of a position, but one thing that I mentioned last night to my guys, and this is a drawing. This is our drawing from last week. I don't know if you guys remember that or not. Last week when we met, it was the 2nd, right? That was, actually, this 30 minutes. So yeah, it would have been back over in here. Yeah, so we had marked this level off. We had drawn it, I think it was on the 4-hour. I ended up erasing the drawings by mistake, but we had a level that was kind of previously drawn and we bounced through it. So this was a zone that I marked off last night for the guys. And I said, listen, last time prices hit this level, it's been great, okay? There's a small level kind of hiding in here, and when price hits it, we may have a bit of a reversal, but I need to see a couple things before we hit it, right? That's why this is not in red, it's in white. I wanted to see a confirmation on the lower time frames, basically stabilizing and starting to build. We never got that. It continued to collapse all the way through and grab the lower level. So I was trying to look for a little bit more of an aggressive target. We ended up not getting the aggressiveness. It didn't kind of meet its parameters. It did go a bit lower. So now we're pulled back in that same level. We're kind of basing. So couple things I'm looking at here, okay? One, obviously this analysis didn't work out for us. It didn't give us the confirmation, so we can kind of delete it at this point. Now what I'm seeing is I have a small level of basing. It's very, very clear. If you're brand new to price action, you should be able to pull this one off with no problems, not even fully understanding. So this is a great little level to potentially take shorts out of. Now, we know that buyers have stepped in at this level. They did it here. We've seen it again where they've kind of given us a little bit of a pop. Now, it hasn't rallied all the way back up again, but for the rest of the day today, again, based off of the yen, what's the movement going to be? There are potential shorts sitting up in this level. Now, why do I like this zone? Well, taking a 1-to-3 risk to reward ratio puts us in front of another zone where buyers have stepped in. I like that. I am all about that one. Now, does the 1-to-5 make sense? No. Okay, the 1-to-5, as much as I'd love to say, take that 1-to-5, it's great. No, it's unfortunately, it's beyond where this level is. We've seen buyers step in before. It's getting a little bit too greedy in my eyes. So for me, if price is able to pop up a little bit, I'm willing to take this. Now, if we're unable to get up to that zone, okay, this level has pushed pretty deeply, right? We've seen price hit it once. It's gone pretty deeply in here. It exploded out. It came and retested again. The orders that were there, the buyers that stepped in to push this higher are not infinite, okay? So there is also a potential break of this level right here. Now, again, this is that Harry Potter trade that I've talked about many times. There's a little tiny bit of a hiccup that we need to watch out for right here in that zone. But this is the potential setup that I'm looking for if we get a break below, okay? I'm looking for a break below that zone. I'm looking for a retest of that zone, okay? If we're able to break out of it along this line. And again, I'm changing the colors just to make it a little bit easier for you guys. Again, we're not there yet. We need to make sure that price comes back into that level. Understand that this little white zone right here is going to be a bit of a hiccup. It's a nice little zone. I'll actually paint that in yellow for you guys. And what may happen is price may break down, bounce off this level, come up and touch it, and then kind of do what it needs to do. All right, but that's kind of what I'm looking for right here for the Aussie yen, right? And again, for those of you that are non-currency based, If you're not, if you're not trading them right now, start looking at them. There's a lot of stuff, especially going on with the Aussie yen right now. Euro yen. So here is that failure to go higher situation that I talked about. Now, last week, I also mentioned that we had a zone sitting right up top. I marked it off in these red. We ended up hitting that zone, right? Here's where we are right now. And then here is where we were last week. Price was right in this level. This was a 4-hour zone that we were fine down from the daily. And we said, hey, listen, we've got some room to run. This is probably a Wednesday, Thursday timeframe trade. It ended up coming up. It barely entered that zone. And then again, you guys can see that it collapsed pretty far away over in the last 2 days, right? 2 to 3 days, right? It started turning at the end of Friday. It's been great. It bounced off where we would expect it to bounce off of. Again, there's many profit targets that you could have taken in this level. This is kind of where we are right now. Now, this is yet another example. Again, I'm going to remove this risk reward. You guys can see that this did well, right? Here is another example of that failure to go higher. Okay, I try to teach this fact again with the Aussie or with the NQ. When price pushes up, again, this time the failure to go higher was sitting inside of a zone, so it was an absolute perfect setup. But if this was an all-time high, we did not have a level. Here's another example. Price pushed up, it made another attempt to go higher. It gave you a little tiny bit of a risk level, and then boom, just continued to push all the way around. Now, profit targets for me would have actually been in this area. You can see I had this one actually marked off of areas that I said, hey, listen, we need to watch out. You guys see the green right here? I said, hey, listen, you need to make sure you're out before that level. You guys can see exactly where price bounced off of, right at that level. The reason why is because this was a nice little kind of basing zone. It popped, it tagged it, and then again, retested, and then bounced right off of it. So kind of hit this one, like a nail on the head. It kind of, sometimes that works. It's like magic, right? It's like magic. So where I would take this one, I'm going to remove that real quick. Kind of an interesting situation, right? We're seeing new levels put in. We're at a level of basing right now, but bringing it up to 4-hour, this is why this one is hard, okay? There's a level right here. Again, we need to be cautious of that level. That's what it based off of. It based, it popped, it retraced, and then boom, exploded higher. That's what we're kind of basing off of, but we're also at the area where the pullback happened. So I would probably take a rest on this one for the day. This pair is moving based off of 2 different reasons. One, the European Union is obviously also having issues with COVID-19, but the yen is the big driver in this one, right? The yen is the big mover. What I did to find this level here in the yellow, and what I did to find this level up top is the same thing I do on every single chart. Because again, we are sitting in this little bit of a zone right now. Wait till it either comes back down or goes back up. Okay, we are in a racetrack, and there's a couple other smaller things in here. But wait till it gets to an area where you see big movement, right? Something lower, something a little bit higher. I think that's going to be a little bit safer for those of you that are not as accustomed with this pair. The one thing, the caveat with this one, it has great movement some days, and then some days it does nothing where it just bases. Okay. One of the biggest things about Nadex that you need to be focused on, and if you guys listen to my presentations, is time expiration. The euro yen is notorious for having a great day followed by a not so great day. The worst thing you want to do is kind of get stopped out because the expiration didn't move, and then it go absolutely crazy on you. So that's one of those ones that you got to really kind of time this one correctly. Based off of this bounce here happened at about 6 o'clock in the morning. It just shows you if you catch it at the right time, it's great. If you don't catch it at the right time, if you caught it, from now, here's the US Open. It hasn't really done much. It's moved about 8 pips in the last 4 hours. So timing, particularly with this pair. Now, pound yen, as you guys can see, once again, here is that failure to go higher. We made kind of what looks like all-time highs, although it's not in the currencies. But again, pushed up, pulled back, failed to go any higher than what their previous level was, and then boom, all the way down to the 1 to 3, came all the way down, hit this 1 to 5 down here. We just bounced off of that same exact level. Again, this is price action. The last time price hit this level, boom, it bounced off. Look, no wick, straight up based off of that level. That's where the best targets tend to be. One of the biggest things that price action helps me with is also finding your targets. Here's a great example of why this was a target based off of the short. Is beyond your 1 to 5, it was down at the 1 to 6 range, and it's bounced off of that level. So right now, looking at this on a 4-hour basis, you've seen this collapse from the highs, right? So I'll take this off. You've seen the collapse. I'll remove that. You can see that we're sitting at a level right now. One thing that I want to point out that just stands out on the chart, you guys see this green square right here? Look at this. Basically 8 hours straight up, only very, very little pullback. Yeah, we have a zone right now. We're bouncing off of it. I want to see if we can get some type of selling effort to step into this one, start pushing this back down. If we get a break of this level here, breaking approximately at the 136 level, there's not a whole lot on a 4-hour basis stopping this from going lower. So it's not a trade set up now. It could be something later in the week that I'm looking into. But if price drops below, it's kind of on my radar saying, hey, listen, if this, then that, set an alert. I want to know if price comes down here. So even though I would be playing longs on this position over the next day, it doesn't mean that I'm not still waiting for this short to happen. Okay, lower time frame, you can see that, again, it's bounced around a little bit. It's not too bad. Right now, this pair is going to probably flatten out a little bit, as you can see over the last couple of hours. This one has really been a great early morning mover, but again, it is very sensitive to the media. You mentioned Brexit, bad news with Brexit. That's kind of shooting this one all over the place. Same thing with the pound. Now, the pound dollar is very similar to what I had in the Dow. We're currently sitting in an hourly zone right now. Here, I can bring it up to an hourly so you guys can see it. This one already has the knockout brackets on there. Last night I talked about there's a zone a bit higher, much like the Dow. If it was able to continue to rally, I'm looking to get short up in that 128.27 to 128.53 range. Unfortunately, it kind of turned on us, came back down and grabbed some more orders and kind of is in the same area. There's a knockout sitting right above where price currently is at 127.66. If this was morning, I'd be more interested in taking the short based off the fact that it is 12:30 in the afternoon Eastern. We're about halfway through the day. Don't love it as much, right? Because this tends to be where it gets slow movement. For this one, all this movement happened 6, 7 o'clock. That's kind of where we bounce off of that zone, and it was a prior area. You guys can see that this is kind of the area that we bounced off of. I would say that I'm short. I don't know if you'd be able to get a Nadex position from now in time. I'd be cautious of this one because any weekly positions, the spread is quite large. You're going to need to get a lot more movement. And I feel that the pound at this point, again, looking on a daily basis, it's starting to stall and it's running into a level that we can kind of see over here. So if it was up here where the Aussie is, I'd be like, yeah, you could, potentially take a weekly position on this one. Got a couple days left. Take this one short. I don't feel the same way with it because it's just not as high up on the curve, okay? And that's kind of what bugs me. Here's the 4 hour. You can see that, again, we've had over the last 4 hours, but we've pushed up right to where we were. So, this one is more of a timing issue than anything else. Again, if you're, in one of the other realms, like the spot currency realm, there are shorts off this area. We'll see and again, this is dollar weakness. Nothing but dollar weakness at this point, pushing higher, okay? Euro pound. Euro pound is basically flat on the daily. Again, we've been consolidating in. One thing that I mentioned last night to my guys is we're in an area right here where we saw a big rally, a base, and then a pop. And it's hit the level, hit the level, hit the level again, but buyers have always stepped in. We are taking a little bit of a bounce off that level right now. So I'd just be a bit cautious with it. In the last 24 hours, this one has only moved 8 pips. 8 pips is not a lot in 24 hours. It is a daily ATR of 70. In 1 hour, it's only moved 8, and these have been some good hours, right? These have been some good hours over the last, This is what we got. Wait, let me stretch it out to make it look really, really big. This is what we got. So really, let's see. So from 12 back down to here. So for the last 6 hours, it's only moved about 20 pips top to bottom, and most of the movements in this happened from 3 o'clock for the European Open. It moved 30 pips up in 2 hours. And that's it. We're in the same exact area. So again, not necessarily the best of levels, not necessarily the best of trades. Not a lot of clean in this one. And again, I prefer to take the cleans. Again, I can shorten this down. The yellow was for kind of a bigger range, but right now we're smack in the middle. You want to take something, small time frame, shorts, longs, we're in the middle, no trades. Euro dollar. So euro today, really, since the market opened, has been just taking off. It's been on fire. It's about 57 pips in the last 24 hours. You can see that most of this is like what, 1, 2, 3, 4, 5 hours. We had straight up of about 97 pips. That is huge. The daily ATR on this one is 89. So in the last 4 hours, it's moved an entire day's worth of movement in 4 hours. Now, unfortunately, it didn't get up to where we were like looking to get shorts. You can see there was a very clean zone where price went up, it based and then dropped. It got close. It got very, very close. It got front run. It wasn't a horrible position. There was actually a knockout sitting right above it at 113.97. To me on this one right now, it looks like it wants to retrace back. Okay. That's my feeling on this one. I would have been much more comfortable taking that short up here. It just didn't make it. We made it within 5 pips. Okay, 5 pips is how close we were. if anything on the shorter term, on the shorter time frames, I would say it's kind of that's where we're looking. For those of you that are, I guess, candlestick pattern people, you guys are starting to see a head and shoulders forming as well. Okay, I'm not a big head and shoulders person, but again, you had a peak, pull back, a higher, pull back, and now it's looking like it's trying to put the other shoulder in right now. So yeah, there's a little bit of reversal on this one. And again, it's not a bad range. It's about 60 pips to the downside. So there is a potential trade setup in here. You could trade this, based off of, hey, listen, there, put this level in right here. Let me change this to white because that's not a warning area. Go there, right? You could say, hey, listen, there's our failure to go higher, Brian. Yeah, it could be, but we need to get a little bit more pullback. We need to get a pullback down on this level and then use that as kind of the entry. You could set it up something along these lines. And again, I'm just roughly drawing this. We don't have the confirmation now. It's not in an area where you're looking to get short yet. The 1 to 3, which is this first line, perfect target. 1 to 5 is just on the other side of this little bit of an area, but again, it may be something that's worth taking or something it's worth looking at. Unfortunately, the knockout is a little bit far away. If the knockout was closer in this range, it would definitely be something to look into, but it's a bit far. So this is going to be a binary or a call spread for that one. All right, dollar CAD. So dollar CAD right now is about 25 pips down, right? Yeah, we're about 25. Actually, I'm sorry, we're about 25 pips up in the last 24 hours. This one, in my eyes, hasn't been one I've been focusing on. I was looking for very clean levels. I like the clean level here. This is not clean. Spent way too much time here. Looking at it on a 4-hour basis, you can see it really, again, nice pop, but this level, it's very hard for price action traders to do much with this. Hey, remember, reading price action, a lot of it is about finding or looking into and theorizing where there are orders, where buyers or sellers will step in. It's very hard to justify that there are still going to be buyers or sellers sitting in the zone when literally it just goes back and forth, back and forth. So it has turned off that level. I don't think this is necessarily a very strong push. I think this is an emotional push. I'm still looking for kind of longer term or lower levels here. It's basically getting stuck where the gap was. Okay, where the gap is. For me, I'm looking for this 30 to 96 range. I think that's where there'll be potential longs for me. And again, I think this is just chop back and forth. Looking for this one into tomorrow more than anything else. Looking at dollar yen. So dollar yen was also a byproduct of the yen strength yesterday. And again, also dollar weakness. You can see that this one took an immense move to the downside. Yes, failure to go higher again, push up, pulled back down, use that as a retrace, and then just absolutely collapsed. This one dropped down about 175 pips over the last, really over here, over like about 16 hours, about 160 pips to the downside. Daily ATR 68, so huge movement, right? Huge movement. This was an area marked off that was a profit target. As you can see, it hit that profit target, bounced, came back up again, and is now pushing through. So, at this point, I am kind of getting more into the probably bullish mindset. We pushed from high on the curve all the way back into levels. Now, there's no levels that really stand out on the hourly. This was a profit target level. On the 4-hour, there's obviously one down here. We need to move about 45 pips. It could definitely do that in the next, 24 hours. If we can get back down to this 107.21, this is a pretty interesting level. Here's why. Okay, if it can move 45 pips from now till 8:30 tomorrow morning, this puts us in a pretty decent location, playing with a 4-hour demand zone, which I love. 4-hour zones. They're some of my favorites. If I had to pick actually one time frame, it would be the 4-hour to trade. Like if I was not allowed to look at any other time frames, it would be the 4-hour. This is a nice level. And what do we have sitting right here? We have a knockout bracket sitting right there. Let me get that knockout bracket for you so you guys can write this down. Obviously, price is not there right now, but again, going forward, especially into tomorrow morning, this could be an interesting trade setup. Again, something you want to keep your eye on. Again, price may, again, in all fairness, price may take off from right here and go all the way back up. And again, then we just didn't get the entry on this one. But looking at this knockout, let me get it for you guys real quick. This would be knockout. Where are we at? That's the it's a floor at this is knockout number 5. Okay, it's not all the way to the bottom, but again, remember, if we are positioning ourselves in this zone saying, hey, listen, I'm looking to get long, if it gets down to here, that's about 75 to 80% of the way through the zone. There's a little bit more risk on the other side, and technically it could go a bit lower. take the knockout out and then go higher, sure, it could happen, but that's not a bad position. If we're able to set ourselves up and that price is there, close to news tomorrow, that could be a nice little one. Again, that is knockout number 6. Here, I'll just drag it across. Let me see if I can make it a little bit bigger for you guys to see. Right here, 107 right here. Knockout number 5. I misspoke. Knockout number 5 right here, 107.12. 107.12 is right here at the very, very bottom of that zone. That would give us about 10, 15 pips risk, because the top of that zone starts at 107.23. And there's a slight variance, obviously, between the two prices. But you're talking about 10 pips risk. That's one of those nice little, nice kind of, and again, the top of that one is sitting here. So you got a lot of room for that one to run. And remember, if this starts going in your favor, going up, 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 knockouts don't expire till the end of the week, right? You got 3 days left on expiration, so you have some room to run on this one, all right? So there's a potential one for that. Dollar Swiss. So dollar Swiss has been an interesting one. So dollar Swiss currently right now is down about 82 pips. This thing, again, we had that bit of a zone here. So this is the 30-minute. We had marked this one off. This was marked off on the 5th, right? We ended up getting that entry on the 8th. Actually, hold on, let me reset it here. Yeah, we ended up getting this on the 8th. You can see this one is just continuing to pull away. So we're now approaching levels where we do actually have a knockout down here. But unfortunately, we're kind of sitting right in the middle, right? I love sells up here. I'm definitely looking for buys down here. We're kind of smack in the middle on a daily. So it's kind of a weird area. We're kind of in that like no man's land right in the middle. Even on the 4-hour, there's not really any clean levels. Looking to the left to see, hey, listen, what does price action look like? You can kind of see it's a push down and then a pop, and then a push down and a pop and a push down. So there's a bit of a level here, bit of a level here, bit of a level here, but nothing really super clean until all the way down here. I mean, I guess there is an argument that we could say, hey, listen, there's an area here to here. Price rallied it based, it shot off of it very strong, and then it got front runner tested in this position. And that's kind of where we're at right now, and kind of seeing it kind of pull back from it a bit. Okay, so kind of an interesting scenario. Remember, the dollar Swiss is more of a geopolitical based pair. Whenever there's barbs going back and forth between the U.S. and China, this tends to be what you see this one move from. So this will be an interesting one going tomorrow. It is typically a little bit more insulated from FOMC notes, but again, we're basing through this level right now. We know there's no super clean levels, so you could potentially get into another one of those kind of like Harry Potter trades that I always talk about, something along those lines. Now, this Harry Potter is going to break a few knockouts on the way down. There's one right at the very, very bottom. That's the first one to go. Then there's another one. I mean, you're going to look at 2 or 3 broken. So this one right now, I would say it's ideally set up if you were looking to go long. You could take a long position off of this one right now. And again, that is knockout number, get this one for you real quick. Let me see. That is what? 94.71. 94.71 is knockout number 3. So if you were looking to take this area long, which I guess you could. I mean, we're kind of almost at a confirmation level on this one. It would be actually, let's see, that one actually, yeah, it's right here. Knockout number 3. Knockout number 3. Not a very big position, right? You can see right now the indicative value is technically 94.93. I'm reading 94, right around 94.93. But something along this line, it's this guy right here. Risk on that one is about $25, okay, per contract. So it's all right. Like I said, that would be kind of going counter trend. It is bouncing off of a level. We did have big push down. We could kind of see a retrace on this one, although I don't know in the next 4 hours if there's going to be too much news that would really kind of set the dollar off on a strength position. It kind of seems like this is just all a retrace from what we had over here. So if this was 10 o'clock in the morning, I'd be all over it. 1 o'clock in the afternoon, a little bit different of a scenario, right? A little bit different, okay? So just keep that in mind. But again, make sure you mark off the knockouts on your charts because there is a small knockout position. All right. So now let's go over to the gold and silver range. So gold is in an interesting position right now. Gold ended up coming up and actually on the 30-minute, you guys can see right here, right? Here's where current price is, right? Right here at 10 o'clock this morning is where the gold reversal stepped in. This is the level that we marked off last week. We said, hey, listen, gold had a big drive down, right? Big push off. Price came up, and again, this was really on the 3rd. Price came up, tagged it here, continued to push away, came back up, and it has reversed off of it again. It's not a horrible zone. Again, it's been touched a few different times. To me, right now, it looks like gold will continue to push down. Question is, what would I do with this tomorrow? So here's the 4 hour. Again, that's a 4 hour zone that gold bounced off of. In the next 24 hours, I would have to say I'm probably a bit more bearish gold because, again, it is bouncing off a 4 hour zone. I would be cautious, though. The market is probably going to start reacting and positioning itself for FOMC notes tomorrow. It's just over 24 hours. It's actually 25 hours until that release, that economic projections. Kind of one you want to be a little bit careful with. There are knockouts for this one, although with the volatility associated with an FOMC, I feel like binaries would be a better way to do it. We don't actually have access to the binaries right now for what we'd be using for tomorrow morning. You would want to use the ones that print or the tonight, but most likely, probably the best case scenario is look to see where the binaries print based off price today. Do not trade them until the open tomorrow or like the 8:30 time frame. Maybe even after that PPI number tomorrow morning, because again, that's going to be the inflation-based number. Kind of see where it is. The reason why I'm saying that don't take them tonight is because get the premium kind of washed out. Remember, there is time premium in all options. If you take it tonight at 6, there's going to be premium that go from now till tomorrow morning. Let that premium eat out. It will kind of help us a little bit. I think that would be the best way to do it. Kind of see where price is. So you can see right now, again, that zone is actually sitting right up in this level. Okay, it's kind of turning around, flipping. So yeah, an overnight bearish, looking for this one tomorrow, although I do think gold will be positive based off the economic expectations. It's really going to come down if they mention one word, stimulus. Okay, if they mention needing more stimulus or even lowering the interest rates even more, maybe potentially going to that negative for the first time ever, I feel like that's going to jack gold. I feel like gold will be definitely an up piece tomorrow. I just think that's going to incite the inflation hawks to come into this whole thing, and yeah, I think gold will bounce. Where can it bounce to? I mean, I don't see any reason why we can't get back up into the 1670 range if it's that big of a release. Now Silver's taking smaller bounces. Now, this is a position we put on last week. Remember we mentioned this, guys? This one actually came in right here is where we were last week. Actually, right here, okay? I had mentioned that price has been down to this level a few times, and I was looking for a break of that level. Okay, here's that Harry Potter trade setup. Again, this is something that I have it on my website. I've mentioned it multiple times. I don't have it in any one of my courses. It's just something I've given out for people. But what it is a continuation breakout. We ended up breaking that zone. We retested, and we came down and hit the exact profit target. So there's another one of those set up down here. It's not fully formed in the same direction, but again, I wanted to follow up on this one from last week. This was a Harry Potter continuation to the downside, all right? Whoops. I don't know if you guys can hear that noise or not. That was actually somebody following me on Twitch. All right, so this is continuing to push back to the downside. I think this one will push back down into the 1760 range in the overnight, but like gold, I feel like this one also has the same scenario where if we are sitting down in this level here, this lower range, with price approximately down in the 1750 range, I feel like this could also get sucked up. With inflation, gold is going to go, gold can go high. When gold gets sucked up, it will typically grab silver's hand and pull silver up. Now, silver is not as high. It's not flirting with the highs up here, but it is quite far up there, right? So again, I'm not doing it on the larger time frames. I'm looking at it right here. And again, bouncing off 4 hour, it's going to continue to push higher. All right, so that's silver. Now, oil, let me pull oil and let's see. Let me pull it. I pulled it last night. Here, actually, unfortunately, I closed it down. But for those of you that don't have access to oil, again, I'm using the ECN data, so it's a little bit off. I'm actually going to just pull this right from Daily FX, okay? It pulls the trading view chart up. So oil, we did not collapse all the way back down to zero. We are clear that one, okay? Looking at it on a daily level, you can see that price is pulling back now. There's not really a ton. One big area that I've been focusing on is if price was able to rally back up into this range, and again, we're talking like that's the $46 range, you need to focus on getting short because last time price was here, it just got hammered to the downside, right? Hammered. Well, we're still continuing to push higher. So dropping this down to kind of say the hourly, okay? Last time for my guys, I mentioned this, we're kind of sitting back up in this range, and there's a few things that I was looking for. I wish I hadn't closed it down now, but I was looking at this area here and saying, hey, listen, we've seen a bit of basing. Can it push through? I wanted it to go higher because I did like some of the levels a bit higher than this. Where we are right now, we've been down in this spacing level right here. Okay, so we're smack in the middle. We do have oil inventory reports tomorrow. I do feel that there will be some movement with the oil inventory report. I don't think the forecast is in currently yet for oil. Obviously, we're going to be using more oil. Why? States are reopening. People are starting to drive. There will be a bit more of a demand on this one. There has been some banter back and forth with Russia and Saudi Arabia. Russia wants to stop reducing the kind of constricted flow of oil. Saudi Arabia wants to keep it out for another year. They want to go into 2020. I think the last I saw was the middle or end of 2021 or beginning of 2022. The reason why is they have deeper pockets than Russia. Russia doesn't want to keep, holding back because they're losing money. The reason I'm bringing this up is because, remember the very beginning of today's seminar, I mentioned that the dollar being weak is not necessarily a bad thing because it will increase exports. For those of you that aren't familiar with the oil industry, the United States does not actually need to import oil anymore. We don't need Russia or Saudi Arabia's oil. We are actually more of a producer than anything else. We have oil spare here, right? If the dollar is cheap, that means there are countries that could buy oil from the United States cheaper than what they can buy it from other countries. Because again, weak dollar, oil is priced in US dollars. So it's an interesting situation because I'll tell you right now, the US will not hold back on oil. They can keep oil at $40 and lower the value of the dollar so other countries could buy oil from the US cheap. That would be an incredible boom. It would help all US oil companies. It would stabilize oil prices. It would bring more exports into the country. And it would also weaken the kind of oil powers overseas. So interesting kind of scenario setting up. I'm curious if that has anything to do with the flip. As well as for those of you that don't necessarily know, China has made great investment into the oil industry, purchasing oil companies and things like that from the Middle East, trying to protect themselves, kind of hedge themselves oil-wise. So I'm kind of wondering, does that have anything to do with the kind of devaluing the dollar? So there's a lot of things going on, but like I said, news is going to be important tomorrow. I'm going to bring that back in for you guys because, like I said, I think that's going to be, oil between the oil inventory report tomorrow and the FOMC projections. This PPI is going to tell us what we're doing with the price. What is inflation doing? Where's the value of the dollar going? Oil inventory is a very interesting story. Small oil plays tomorrow. FOMC economic projections is going to basically say, what is the Fed doing? Are we going to continue to print money and make a whole lot more of it and weaken the dollar and increase inflation or potentially do it for the sake of the overall markets? And will this Fed funds rate? I don't think it's going to be a surprise going down to zero, but what could happen? What could happen, right? That could be interesting. So a lot of different moving pieces tomorrow. Like I said, a lot of stuff going on. So oil, again, like I said, I think oil right now being in the middle, we need to go either high or low before oil inventory reports. If we can go back up into the 38.66 range, I could be looking at shorts. I've seen price do it, 2 other times prices turn it around. What about longs down here at 37.29? Sure. I mean, we've seen this kind of rally off of it. We've seen a crash and then a flip and kind of turn around from that same level. So these are kind of 2 news areas that I am focused on for tomorrow. All right. So with that said, guys, that is bringing us to the end. Make sure you guys mark your calendar for next week, June 16th. I can't believe it's June 16th. We're already in the middle of June. I feel like summer is already kicking through. You guys stay safe out there. And with that being said, trade safe the rest of the week, and I will catch you then. Take care.